Welcome to Stock World, where we break down the latest financial news, market insights, and stock analysis to keep you ahead in the world of investing. All right, let's dive into the latest breaking news surrounding UnitedHealth Group. Traded under the ticker symbol UNH, the company's stock has recently experienced a dramatic decline, falling by 50.23% over the past month. This drop has seen the stock plummet from the upper $500 range to a low of $257 per share. However, today we're witnessing a significant rebound, with the stock climbing roughly 6.8%. So, what's driving this sudden turnaround? It turns out that 3 company insiders have recently made substantial purchases of UNH shares, taking advantage of the steep decline in its value. These insiders include directors John Noseworthy, Kristen Gill, and Timothy Flynn, all of whom have made noteworthy investments while the stock trades at multi-year lows. The first of these transactions was for around $500K, the second exceeded $1 million, and the third was approximately $100K. What makes this development particularly intriguing is the recent history of insider activity within UnitedHealth Group. Over the past 3 years, insider sales have far outpaced insider buys, totaling about $207 million in sales compared to just $2.1 million in purchases. In fact, the bulk of these buys came just within the past 24 hours. This sharp contrast in trading behavior has caught the attention of many market analysts. Now, who exactly are these individuals, and why are their actions significant? As noted, all 3 are directors at UNH, meaning they already had stakes in the company. However, the most significant transaction came from Kristen Gill, who also serves as a senior executive at Google. Her recent investment more than tripled her existing UNH position, signaling a strong vote of confidence in the company's future. This surge in insider buying comes on the heels of troubling news for the company. Just a few days ago, the Wall Street Journal published an article claiming that UnitedHealth Group is the subject of a criminal investigation related to potential Medicare fraud. This news sent shockwaves through the market, triggering a significant sell-off. However, UNH quickly responded, denying any formal notification from the Department of Justice regarding such an investigation. The company dismissed the article as speculative and lacking official attribution, further asserting that it stands by the integrity of its Medicare Advantage program. This is a critical point because Medicare Advantage is a significant part of UnitedHealth's business, contributing roughly 25% to 30% of its overall revenue. If allegations of fraud were proven true, it could have a catastrophic impact on the stock's value. However, the lack of confirmation from the DOJ and the bold insider buying suggest a different narrative. Adding to this, the short interest in UNH stock remains remarkably low, hovering around 0.98%. This indicates that institutional investors are not heavily betting against the stock, a strong signal that they do not anticipate a major downturn in the company's fortunes. Typically, when there are widespread concerns about a company's financial stability or regulatory troubles, short interest tends to spike as investors attempt to profit from the anticipated decline. The absence of this kind of aggressive short positioning adds another layer of intrigue. While it's impossible to definitively know the outcome of this situation, the combination of substantial insider buying and low short interest suggests that these directors believe the company's recent challenges may be overblown or temporary. It's also worth noting that despite the recent turmoil, UnitedHealth has a strong track record of financial performance. The company's revenue has shown consistent growth over the past decade, with only a minor setback in 2024 due to a one-time cybersecurity incident. Looking forward, projections for UNH's earnings remain mixed. Analysts now forecast that the company's earnings per share EPS for 2025 will land around $24.06, down from prior estimates exceeding $26. This adjustment reflects the cautious outlook following recent events. Nevertheless, longer-term projections still show double-digit growth, aligning with management's target of 13% to 16% annual EPS expansion through 2029. Now, consider the company's valuation. Over the past decade, UNH's average price-to-earnings PE ratio has been around 22.87, yet today it stands at just 12.12, nearly half of its historical average. If the market regains confidence in the company and the stock returns to its average PE, this could represent a significant upside for long-term investors. For example, if the EPS grows modestly to $20 by 2025 and maintains a conservative 6% annual growth thereafter, the total return by 2030 could exceed 109%, translating to a 13.13% annualized return, well above the broader market average. In a more optimistic scenario, where growth hits management's targets, the potential return could be as high as 208%, equating to a 20.65% annualized gain. Finally, it's worth mentioning that UNH also offers a compelling dividend story. With a current starting yield around 2.88%, one of the highest in the company's history, and a 10-year average dividend growth rate exceeding 16%, it remains an attractive option for income-focused investors. Thanks for watching my YouTube channel. If you found this analysis helpful, don't forget to like, share, and subscribe for more in-depth market updates. Stay tuned for our next video.